Is the covered call a bullish strategy or a bearish neutral strategy? This is a debate that has come up endless times over the last couple of years, and frankly, I'm just sick of explaining myself in the comment section, so I figured I'd make a video that I could just link every time somebody wants to debate this topic with me. Before I tell you exactly which I guess I think it is, let's go down to the comment section. I did a nice poll. I said simply, is there covered call a bullish or bearish neutral trading strategy? This was 5 days ago. 79% of you said that it is bearish and neutral. Well, 21% of you said that it's bullish. And we got about 563 votes. Let's look and see what these 29 comments say. Some of them are going to be my responses. I didn't get to all of them, so some of these we might read together. Hard to say, many variables. Presently, I sell close to the money, delta 50. Okay, great. Volatility is key. Yeah, volatility definitely helps. Volatility helps with the premium, definitely. But I don't think that really changes the strategy sentiment. Maybe we'll see. I don't know. Depends on if you're buying or selling. The covered call, pal, is when you sell a call and use 100 shares as collateral. Unless you know of a different covered call, I don't know. I never know the time to sell calls, so I only make many after selling the covered call. Okay, that's great. It really depends on the delta. Okay, now we're using the Greeks and we're getting all fancy. I don't think the delta really has anything to do. The delta is pretty much just your risk tolerance as you enter the trade and what you think that trade is really going to do, I guess. I know technically it's bearish, but I buy stocks, I'm bullish, and I sell out of the money calls. So it's a tough call, a little bit of both. The infamous, it's both. It could be, it depends. I don't know. Frankly, if you're going to take the position, just stop it. Technically, it's bearish if that's the way you feel. Depends on what you are trying to achieve. Well, that's what I'm asking. What are you trying to achieve when you write a covered call? Are you hedging against a downward or a neutral position in your underlying, or are you doing it because you think that underlying is going to shoot up to the sky? It's a little bit of everything. I'm just going to stop there. I'd say bullish. I am buying it, selling short, buying. No, we're selling. Covered calls, guys, are when you sell an option. It depends on how you view it. That's what I'm asking. If you're how you view, that's what I asked. So that depends, I guess. If you look at the entire position itself, the short call plus 100 share. Now I'm just asking about the covered call. Doesn't just the covered call. Hey, did I miss something? Do you still trade futures? Oh my gosh, guys, the video was that I quit day trading options. Please watch the video before you make these comments. You're not the only one, but I get the comment every single time I talk about options. I know the right answer is bearish or neutral, but there's always a but. Like, why are these people that are saying it's bearish? Just stick by your guns. Like, why does there have to be a but? There doesn't have to be a but. But if you think the stock is going to go down, why own it at all? That's right, because, you know, when you own a stock that you want to own, it's only going to go up forever? No. You own stocks that are going to go up and down, right? So why own it at all? Like, I don't own stocks that I think they're going to go up forever and never consolidate and move sideways or go down. I mean, maybe you found the stocks that can do that. Congratulations. Can you please DM me and let me know what stocks are never going to consolidate or go down, please? Although it's technically bearish, here comes a but, I bet. Because it's technically bearish, if you do it carefully, as you teach in your videos, it can be a way of keeping your stocks and getting dividends as sort of a bonus. I'm very conservative. I'm criticized often for how conservative I am with the wheel strategy and selling calls and selling puts. I'm a conservative guy, so I will own that. Thanks for the great content. I appreciate you. Bullish because it's a positive delta. Isn't delta how much the premium is going to increase or decrease with a $1 move in the underlying? I think that's the definition of delta. I could be wrong. I've only been doing this a couple of years, but I don't think the delta makes it bullish. When we buy and sell options, the Greeks are there. If I buy a put, the Greeks are there. If I buy, I don't know. But short-term sideways bearish movement yields profit on the short leg. So are you saying that it's, well, I'm confused. Anyway, before I give my answer, very straightforward answer that, hey, I'm open to criticism, and you can tell me I'm wrong. I can handle it. All right. I'm not arrogant. I can handle it. But before I tell you what I think it is, I want to ask you a couple questions that you can answer yourself. And then if you still feel one way or the other, so be it. My questions are this. When you are going to write a covered call, okay, at any delta, at the money, out of the money, do you want that stock to shoot to the moon? That's a question I ask. Or do you want it to stay sideways and go down? Let me phrase that differently. If you already sold a covered call, you're currently holding it, and you go to the market at 9:30 in the morning and you find out it's up 20%, it shot up, it's super bullish that day, and you hold that covered call, do you go, yes, it went up just like I wanted it to when I wrote that call because it's bullish? Or do you say, shit, I held this covered call and now it's gone up and now I need to manage or roll? Like, what do you say to yourself in those types of conditions? Me personally, when I write a covered call, I do not want the share price to shoot upwards. If I have a covered call and I wake up in the morning and it's up 20% pre-market, that's not really cool for me. I'm not stoked on that at all. Guys, the covered call is a hedge. It is a hedge for when your 100 shares are not moving upwards and getting you capital gains. It is a hedge against a loss in capital gains when it's going down, or no capital gains when it's going sideways. Hence why people love doing it with dividend stocks, because dividend stocks don't shoot through the sky. And why I had a tough time with the covered call last year when I went to tech stocks and everything rebounded, and every single week the stocks were just tearing to the moon. That was some of the worst covered calls I ever had to write in my whole life because it was going up. Okay? This is not like what do you want to happen? This is not a what do you want to happen. Okay? And yes, you use the covered call to collect premium. That's fine. But that's not the primary goal. That's like the back burner stuff. You are going to use a covered call as a hedge when the stock price consolidates or moves downward. So if you think that the stock is going to go sideways or down, and you want to hedge against a loss in capital gains, you then write calls against it, making it a bearish or a neutral trading strategy. Your sentiment is bearish or neutral, okay? If the stock is going up 3% a day, you are not going to be writing covered calls on that. And if you are, it is going to make your life miserable. Because what happens to the value of the covered call as the stock is bullish? Premium goes up. You lose money, right? We win in the covered call when things stay neutral or they go down. And maybe you don't want to win in a covered call, right? Maybe you don't. Maybe you want to write at the money or in the money covered calls and collect all that premium. That's fine. That's your trading strategy. But at its root, at its core, the covered call is designed against a nice consolidation or a bearish strategy. If you think the stock is going to, would you write a covered call with NVIDIA right now? What delta would you use? Would you? And I'm not being sarcastic. I'm just trying to make my point very, very clear. That's a stock that is ripping. And we're not talking like stock like Tesla where, yes, the premiums are high because of volatility, blah, blah, blah. But writing covered calls against Tesla is also very hard. But I'll tell you, the days that you love having covered calls with Tesla, not when it shoots up 20%, but when it goes down 20% in a day. That's all. It's a bearish neutral strategy. Google it. I didn't make this up. Google it. Link to me in the comments a website with any sort of credibility that says that the covered call is a bullish trading strategy. I'd love to do a follow-up. Like I said, I'm not calling anybody out. I just wanted to make this video so that when I call it a bearish neutral strategy in videos and everyone gets in the comments, now I can just link this video and it'll give my full explanation. Even if you think that explanation is right or wrong, I am open to criticism. I always have been. I've been on this channel for 7 years now. All right? Let me know if I change your mind. Apparently 80% of the people on this channel agree with me. Some people, and maybe the people in the comments that were like, it's bearish, but now you don't need to use your but anymore. Right? Just ask somebody, if you want a covered call, do you want that stock to rip? Or do you want that stock to stay flat and go down? I'll catch you on the next one.